Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we began our discussion on the carry trade with a look at how traders use this strategy to take advantage of interest rate differentials between different countries. In today's lesson we're going to continue this discussion with a look at the role that leverage plays, as well as by looking at some of the things that traders look out for when implementing this strategy. So let's get started.
As we saw in yesterday's lesson, if a trader buys the New Zealand dollar-US dollar currency pair, then as of this lesson, they will earn $15 per contract held past 5 p.m. New York time on Monday, Tuesday, Thursday, and Friday. As we learned in our lesson on rollover in Module 2 of this course, they will earn 3 days worth of rolls, or $45 on Wednesday, to take into account Saturday and Sunday when the market is closed. This brings the total interest paid for the 7 days in the week to 7 times 15, which equals $105. As there are 52 weeks in a year, if a trader held this position for an entire year and the rollover rate did not change, they would earn $105 times 52, which equals $5,460 in interest from the rollover portion of this trade. At the current market rate for the New Zealand dollar US dollar as of this lesson at 0.7687, this is an annual return from the rollover portion of the trade of 7.1%. This, of course, makes the large assumptions for simplicity's sake that the exchange rate and the rollover rate will remain the same as they are today for the 1 year period the trader is in the trade. Now, you may be thinking to yourself at this point, well, Dave, I was kind of excited about this whole carry trade thing and was seeing how it was so popular until I see a 7.1% return plus all the caveats. To be honest with you, this does not get me too excited, and I don't really see why the trade is all that popular. As some of you may have already realized, however, if we were to utilize some of the leverage that is available to us in the Forex market, as we learned about in Module 2 of this course, then we might be able to take that 7.1% return and juice it up into something a little more interesting. So with this in mind, let's say that I leverage this position 2 to 1, which most traders I think would agree is still pretty conservative. This would double the return from the rollover portion of the trade to 14.2%, a return that if generated consistently would outperform the long-term average return of the U.S. stock market. Taking this a bit further, if I increase the leverage to a more aggressive 3 to 1, that would put my return from rollover at 21.3%. And if I up the leverage to an even more aggressive 4 to 1, that would put me at 28.4%, a return that if I consistently generated year after year, would put me among the top traders in the world. When people first see this, many times their initial reaction is one of excitement, which makes them want to jump right into a trade. As with most things, however, if making money was this easy, then everyone would be a millionaire. So while this is an enticing return, and while there has been a lot of money made by people employing carry trade strategies, there are other things to consider. Firstly, exchange rate fluctuations, which can cause additional profits or wipe out all profits and losses, and actually cause losses on the trade, should be considered. Secondly are changes in interest rates, which can increase the positive rollover, decrease it, or cause a trader to end up paying for holding the position instead of earning. Thirdly is the use of leverage amplifies any gains made on the strategy, but also amplifies any loss should the trade begin to work against the trader. It's how traders deal with these unknowns that separates traders who consistently make money with carry trade strategies from those who do not, a topic which we will discuss in our next lesson. That's our lesson for today. As always, if you have any questions or comments, please leave them in the comment section below, and good luck with your trading.